what are the best practices to stay clean? I know we talked about paying on time.
Yeah.
And
quarterly estimated
Yeah,
payments.
quarterly estimated payments are
Go ahead,
huge.
talk about
Not
that.
enough people make the quarterly estimated payments.
I'm guilty of it too.
I'm
As an
guilty.
accountant with a small business, it's if you try to get them in.
Yeah.
What happens when you don't get them in? Let's say you missed the first and second quarter. Let's say you watch this, you're just hearing about it.
Right.
Halfway through the year is over. You haven't made your estimated payments. Should you bulk up on your third quarter estimated payment? Should you go in today and make an estimated payment for first and second? Can you even do that, or you missed it?
You can. You have to understand that basically interest and penalties start accruing from the very first quarter. And the first quarter payment can be a little annoying to pay because you're like, hey, I just filed my tax return.
And I'm already paying for this.
Yeah, it's like
year.
I just paid and now I'm having to pay like an estimated payment. Like what the heck? With how the IRS has it set up, how the IRS has it designed, the interest and penalties start accruing from that like first quarter. Now you can make up for it. Like once you basically make the estimated payment, that stops the interest and the penalties from accruing. So it's always good. Like,
so if you missed it, send in the money.
Exactly.
So if you're a little bit late, still send it and try to catch up. And then what are estimated payments based on?
There's basically two areas for that you're at least going to go to an accountant, and there's like two schools of thought or two areas, however you want to describe it. There's two ways for estimated payments. There's safe harboring, which basically is saying that, taking your activity from last year, what your total tax was last year, just pay that again.
Divide it by 4. Send it in every quarter.
Send it in every quarter, divide it by 4. And if you do that, then, the IRS isn't going to give you any penalties or interest. But depending on your income, like if you're above a certain threshold, the proper safe harbor estimate is over 110% of your prior year's tax. If you're in a lower income category, it's just 100%. But I think once you get above a certain threshold, it's 110% of your prior year tax to safe harbor. Then the other category, school of thought, is basically just 90% of your current year income, which can be, depending on how you get your income, can be a little bit harder to gauge.
So what's the calculation on that? So let's use a round number. Let's say you you're going to make $100,000, and this is again for self-employed people, because typically with W-2, if you're a W-2 salaried employee, the withholdings are already going out and being submitted by the payroll service for whoever your employer is. Right, exactly. So again, back to self-employed, you're making $100,000. That's net, right? So maybe you had $150,000 of gross. Right. You had $50,000 of bona fide expenses. Now you're walking with $100,000. Right. What should my estimated payment be based on $100,000?
Based on 100,000, I mean, again, you have the question of whether you're going to itemize or take the standard deduction. Let's just say standard deduction. Yep. So $150,000 of income, $50,000 of expenses, $100,000.
You're single.
Yeah, if you're single, then
so
it's going to be about like
15,000.
About 15,000, like about 14,500.
Okay. So now you're at the 85,000 marginal tax rate.
Yeah. Then I think at that tax rate, you're about 20%.
Okay. So take 20%, divide by 4, and send that in, and you should be good.
Exactly.
Okay.